There are three major forces right now that are driving everything. And when I say everything, I absolutely mean everything. But if you understand them, you'll get a better idea of where we are headed next. So let me give you a quick breakdown and then we're going to jump into the deep dive. But first, this is episode 3 of the Benson Report. For those that are regulars here, y'all know I have been really kicking off. I've been kicking the can down the road for this YouTube thing for a really long time. So this feels really, really, really good. Junior, I ain't never told you to sell that. Nice try. So this feels really, really good to actually jump in and have a spot where I can have it recorded and people can actually go and watch these later. This is episode 3 of the Benson Report. And for those that don't know, I am the CEO of Benson AI. Ultimately, what we do is we use AI to just do your investing for you all automatically. And we are doing a great job at it so far, if you ask me. But with that said, on Tuesdays and Thursdays, I jump on live to also just go over what's happening in the market, how are we moving, and more importantly, what are we doing to actually make money off of it. And last order of business before we jump into it is that if we get this live stream up to 100,000 likes before I jump off, and I'm gonna be honest, this docket that I have is probably gonna take about an hour. If we get to 100,000 likes before I jump off, I will share my number 1 stock of the day. And this stock of the day, by the way, as a little like brief, this stock of the day is already up 145% since January. We're off to a great start. As Junior just said, we are at 5,000 likes. It is absolutely not, but I can jump into that a bit later. Junior said, is it Oklo? It is not Oklo, but if we get this chat up to 100,000 likes, I will absolutely share the stock of the day. And in case I missed anything else, drop questions in the chat. Somebody said the audio is low on YouTube. Okay, I don't even know how to fix that right now, Joseph. So thank you for sharing that. I'm probably going to have to check that after I get off, because this is a one-man show, y'all. This is not me having a whole team helping me record. This is quite literally a one-man show. I spent the last hour trying to get everything set up. But with that said, 3 major forces happening right now that are shaping every single thing. And if you're an investor, this is just one of those beautiful times amidst all of this chaos. Number 1, corporate profits are absolutely crushing it. I cannot underscore just how wild of a phenomenon we in when we are watching all of these corporations destroy in the best way possible their earnings. The second thing happening right now is just that we are watching an AI infrastructure boom. We've all seen these crazy deals happening in the AI world right now. Everything is being held up by AI right now. And for that reason, some things feel chaotic, but at the same time, it is generating a lot of money. And then the last part of this perfect storm is that we are watching something else, which I personally am calling a deal-making renaissance. This is probably one of the first times in history where we are watching so many of these companies partner up and strike deals because they are preparing for what's next. And I call this the perfect storm because we got to be honest. There are a lot of things happening right now in this country that feel incredibly chaotic, including these 3 things. But there is something underneath it. I think one is just that the people like to think that all of these things are coincidences. When you are in this game of investing, analyzing data and numbers, you understand there is no such thing as a coincidence. There is no such thing as a coincidence. These 3 things are actually all feeding off of each other, which is why I call this the perfect storm. And if you understand how all of these things are connected, you'll start to see opportunities where everybody else is skipping over what's happening. So let me paint a picture of what this actually means. I'm a picture person. I'm a visual guy. So I just want to paint this picture. Like, close your eyes and listen to me as I say this part. Imagine you are in the middle of America, or I guess Florida, because Florida has a lot of hurricanes. Imagine you are watching three hurricanes happen all at once. You look to your left, you're like, yo, the news just told us about that hurricane over there. You look to the right, you see another hurricane over there. And then you look behind you, like, yo, this feels insane right now. Absolutely insane. These hurricanes are unstoppable and they are incredibly powerful. That is exactly what is happening right now. And while everybody is trying to figure out what I mean by that, we're talking about tariffs, we're talking about Fed decisions, and we're talking about geopolitical tensions right now. All three of these things are essentially shaping what is happening right now in the investment markets. Not just the investment markets, but the entire country, for lack of better words. These three forces are essentially reshaping every single thing that we know. I'll say that again. It's reshaping every single thing that we know about what's normal, what's expected, how do we operate. All of these three things are reshaping all of it. We have tariffs, which we have never seen before at this scale, determine how we're going to trade with other countries. We have the Feds and the Federal Reserve and our president arguing back and forth. Not even arguing, because one side, like the federal Jerome Powell has not really snapped back at Trump, so I'll say that it is not really a argument. But more importantly, they don't seem too aligned. And then on top of that, just this week or end of last week, we're seeing a now second trade war with one of our biggest allies, China. Allies from a trade perspective, not from a military/political perspective. I'll be very clear there. But with all of that said, we are also sitting in the midst of history being made right now. The S&P 500, which for those that don't know, the S&P 500 is just the top 500 companies in the United States all at once. These companies are used to measure how strong the United States actually is. These companies, again, are the benchmark for what is good, what's bad. We generally look at them for how well the country is doing. The S&P is on track for the 9th consecutive quarter of earnings growth. That is essentially 27 months of straight growth, and we have not really seen this happen that too many times in history. Fun fact, this is one of the longest profit expansion streaks in, I don't know, a few years. And the crazier part about all of this is just that Wall Street generally is constantly saying, this won't keep going. It's impossible. And the way they do that is by issuing estimates on earnings. Sure enough, Wall Street is actually like, oh crap, this looks different. And instead, what is Wall Street doing right now? Wall Street is across the board raising their earning estimates. Said otherwise, all of the smartest investors in the world are looking at all the data and they're like, yo, these companies are about to continue growing. Normally, the pattern is that they reduce their earning estimates to say, this one is definitely about to crash or not be able to perform given this current environment. Instead, all of Wall Street is saying, yo, we are seeing crazy growth ahead. And this brings up like this other point I've been really trying to wrap my head around, which is the stock market is very different from the real world. The real world is all of us as regular people. The stock market is a proxy of how wealthy people are moving. So when we say like the rich are getting richer, like it's only about to continue happening unless you are deciding to play the game of building wealth, you are going to be left behind. Because right now we are looking at people who are in the stock market essentially about to continue seeing growth amongst their portfolios. I talk about this ad nauseum. I jump on TikTok every single day to say the exact same thing. You need to be investing right now. There is no other option. If your goal is to build wealth for yourself, your family, your children, you need to be investing. Plain and simple. And if you ask me what's the best vehicle out there, it is obviously the stock market. You get, you're looking at history. On average, stock market grows about 10% every year for the last 100 years. It is incredibly liquid, meaning you could jump in and jump out as you see fit. And quite literally, if you decide to play it the smart way, you're going to recognize that you start getting something called compounding interest. It's a beautiful system, but nonetheless, right now we are watching something happen where Wall Street is constantly increasing their estimates for the S&P 500 across the board instead of cutting them. So let's dig into each of these forces, starting with the first one, which is these profit numbers that Wall Street is seeing right now has everybody going absolutely crazy. Like, no joke. I call this essentially a profit renaissance. And when I say profits are crushing it, I mean this week, quite literally. This is not even based on information I saw 7-8 months ago. I'm talking about this week. We saw record-breaking profit from some of these companies. Now, regional banks, I will say regional banks are not included here. Regional banks, again, are small regional banks. However, when you look at the big banks, the banks that actually define credit facilities in this country, that define all major transactions, those across the board, dominating. Oh, Pam just said in the chat, is it me or is Philip glitching? Am I glitching for other people here? Because this was why I wanted to ask that question earlier. I may be, and I'm hoping that I am not, at least for the people on TikTok. I may be glitching. I'm hoping that I'm not. Somebody said yes, glitching a bit. So let me try to change a setting here just to see if that helps. Give it a few seconds. I just updated a setting to just, Ruth said on and off. Somebody else said I am glitching. So give me a few moments. I'm about to change one of these settings. Y'all know, again, this is like live in the moment. I am really actively trying to figure out how do I, keep all of these different things happening at the same time. So somebody said I was glitching. I don't know how it looks now, but let me know if it continues to pop up, because I can change the setting again. So you let me know what you see. But with that said, somebody already beat me to the punch. We are talking about banks. This week, the major banks came out and reported just how well things are going. Thank you, Pam, for letting me know that it looks better. I changed one setting down. So again, we tweaking as we go along to figure this out. Morgan Stanley, perfect example, came out on Wednesday. What they announced to us, and this is not just Morgan Stanley, it's again, all of these major banks. What they announced to us is that their profits jumped up 45%. This past quarter, they brought in $4.61 billion. I'll say that again. They brought in $4.61 billion. The CEO quite literally came out and said things were outstanding. Equities trading for Morgan Stanley shot up 35%. They brought in $4.12 billion on equity trading. And in addition to that, their prime brokerage, by the way, most people don't know what prime brokerage is, so let me explain that. Prime brokerage, quite simply, is the casino for hedge funds. When it's hitting records, that means smart money is also winning big. Prime brokerages under JP Morgan also came out and hit record levels. But again, is not just Morgan Stanley. JP Morgan came out on Tuesday. We expected, when I say we as investors expected JP Morgan to bring in about $4.85 per share. Instead, they brought in $5.07 per share. Their trading revenue hit another record. They brought in $8.9 billion for Q3. And Jamie Dimon, the CEO of JP Morgan, said these results were consistent with a soft landing, meaning they were able to do this while everybody else was nervous. These were consistent with a soft landing. What does it look like when things are back to normal? As in, it's going to be a whole different world. Bank of America, same thing. Bank of America came out and their revenue shot up 43%. Net interest income for Bank of America was about $15.4 billion, if I remember correctly. But the interesting thing about all of this, it is not just the banks that are having fun with all of this. We're seeing this across the board. Again, we're talking about the S&P 500, these major companies that are indicative of how healthy the entire country is. Again, it's not just the banks. Apple, as an example, in Q3, they brought in $94 billion, which is up 10%. And y'all know this, or y'all may not know this. I am not a fan of Apple, the stock. I'm not a fan. But nonetheless, they are still bringing in dough. They brought in again $94 billion, up 10% this past quarter. And interestingly enough, for Apple, this has actually been their best quarter since like December of 2021. But a part of Apple's growth is a bit of this tariff stuff. To be fair, this tariff stuff for Apple really helped them out. Apple's sales jumped up about $820 million, and it was actually because everyone thought that these tariffs were going to cause iPhones to be $2,000-$3,000. So what regular people did is they decided to go out and buy all of their iPhones early. And for Apple, that translated to $820 million in additional revenue above essentially what we were expecting. But again, it's not just Apple. It's not just these banks. Microsoft. Revenue shot up 13%. They brought in $70.1 billion. Their cloud revenue, which is what all of us nerds are paying attention to Microsoft's cloud revenue. They brought in $42.4 billion. Again, all of these major companies are crushing the estimates. Now, again, these individual companies are absolutely amazing, but the pattern, when you zoom out and look at the entire market, it's looking even better. Currently, again, right now we are in 9 consecutive quarters worth of growth at least 8%. And when you look at history, when companies continue to beat like this consistently, what you start to then see is additional growth happening. This is about to now be the 4th quarter of double-digit growth in the S&P 500. And the, again, nerve-wracking thing about all of this is just that most people don't understand these numbers, so they can't really like wrap their minds around just how insane this actually is. When you look at history, on average, 39% of the companies in the S&P 500 generally say, hey, we're going to do well. The remaining roughly 60% of the S&P 500 is generally like, yeah, it's about to be rough. Right now, we are seeing the exact opposite. 50%, half of the most important companies in the United States, all are issuing positive guidance. What does that mean? That means all of these companies, the Teslas, the Googles, the Amazons of the world, are all coming out and saying, hey, we're about to do very well over the next quarter. We already have contracts lined up. We already have the products ready. We are just waiting till the contract is due for us to ship the products. Again, 50% of the most important companies in the United States are all saying, hey, this next quarter is about to look really good. And I want to make this as simple as possible. These companies are not just making money. They are confident that they are going to continue making money. And that's like the big difference between like a rally and a real bull market. A bull market is when these companies are saying, yo, we're making so much money. We also have clear guidance of what's about to happen over the next 2-3 quarters. And as a result, we're feeling very confident. So just to let you know, get on board. That's essentially what all of these, well, at least half of the companies in the S&P 500 are saying. And the best part about all of these stories of these companies generating so much profit and revenue is just that the news is going to tell you that these companies are just making money because they decided to cut labor costs. That's the furthest thing from the truth. These companies are experiencing revenue growth through pricing power and efficiency gains. The perfect example to think about all of this is Meta. Actually, Meta is a company right now. It's Facebook. Let's zoom out a bit. Meta is the owner of Facebook, Instagram, and WhatsApp. What people may not understand is just that Meta, a big chunk of their revenue actually comes from advertising. What they do is they say, hey, we got all of these people on Facebook. You want to send them advertisements? Well, you got to come through us. So all these people will go through Meta to say, hey, we can send advertisements through Facebook, Instagram, and heck, sometimes even WhatsApp. But What people may not know is that Meta, over the past few quarters, has started using AI to optimize all of those advertisements on behalf of those people. And the results have been insane. What they're seeing is just that they're getting more revenue from these same ads, but with far fewer people and cost. And their AI target ads are essentially just getting better. You get higher click through rates, and advertisers pay more. It's a beautiful cycle. Hey, they built a system of AI to say, hey, if you use this tool, you'll be able to get in front of more people. Once you get in front of more people, Meta is then going to charge you more money. And then because you made money off of getting in front of those people, you're also going to be making money. So it's this like nice little cycle. But it's all starting with, hey, they are building AI directly into these products. But again, when you look at the news, it is just, oh, they're only doing well because they cut some staff. No. They're doing well because technology is making them a lot more efficient. Revenue is actually growing because of this technology. Like at a high level, it is just Meta is spending less on the moderators, and instead they just have AI doing all of these reviews. And as a result, revenue is up, costs are down. And if you don't believe me, profit margins hit a record for Meta of 14%. Revenue growth was actually 6.3%. That's the highest since Q3 of 2022. So again, we're talking about real companies making real profit here. The takeaway, if you don't understand anything else or don't care about anything else, the takeaway here is just that these companies are not just making more money. They're making more money incredibly efficiently. And speaking of efficiently, I want to remind people that if we get this live up to 100,000 likes, I'm also going to share my number one stock of the day. I'll even share extra information on that stock, why it's super exciting. We're at, I don't know, somewhere around 30,000 likes right now. We're about halfway through the docket, so we gotta get the likes up if we want that stock to be shared at the end of the live. But with that said, second force right now is that we are, and we all know this already. This one is not a surprise for anyone. The AI, we are watching essentially like an AI infrastructure tsunami. When you look at all of the growth in the United States over the past quarter, if AI was not there, our growth would be flat at zero. The real problem is that everyone thinks that AI is just ChatGPT and like a robot assistance. And that's just, it couldn't be further from the truth. In reality, this whole AI thing is infrastructure. It is the picks and the shovels of what are going to power the next generation of like the internet, consumers, enterprises, X, Y, and Z. And what's happening right now is that these major companies are spending a lot of money to make sure that they are prepared for the next decade or two. And for us, because we see them being so aggressive, we're like shocked by it. We're like, yo, how are they bringing in so much money? They're bringing in so much money, or how are they spending so much money? They're spending so much money because they are so confident that this technology is going to make their business more efficient. And is a little bit past confidence because they're already seeing signs of it. Again, Meta revenue is up because they've already started using all of this AI to drive actual revenue growth. But again, we're not just talking about Meta, it is across the board. It is so much money being spent on AI infrastructure right now. Perfect example. Because I do like numbers. Some people like the numbers, some people don't. But perfect example is that at the start of this year, Microsoft came out and they were like, hey, we are going to spend $45 billion on AI. You can think about that as buying NVIDIA chips, building data centers, all of it. And a few months later, they came out and said, yo, I was completely wrong. We're actually going to spend $59 billion on AI this year. Essentially, in 9 months, they said they recorrected their estimate and said, we're going to spend an additional $14 billion to make sure that we are ahead of the curve when all of this dust is settled. And when you look at it again, it's all of the big companies. You're looking at Amazon, Google, Microsoft. They're all doing the exact same thing. But when you take a step back, zoom in a little bit, where is all of that money going? Not surprisingly, of course, 50% of the money that is being spent right now is going straight to Nvidia. Hence why Nvidia has been on the news so much. We're talking about billions of dollars flowing directly into Nvidia every single quarter from Amazon, Google, Microsoft, Tesla, all of the heavy honcho companies out there. This reminds me of something that happened about 175 years ago. I'm a student of history, and what that means is just that you go back in history, you look at these patterns and say, "Hey, does this look different, similar? What did we learn from history so that we don't make the same mistakes?" 175 years ago, fun fact, was the California Gold Rush. What happened during that time, and I think the year is 1849. What happened at that time was just that thousands of people came to California specifically so that they can start searching and hunting for gold. Thousands of people came. You had, if I remember correctly, that was also one of the largest migrations for Chinese people to actually come to the United States. They started out in California, helping out with the gold rush. And we all hear the gold rush and we're like, oh yeah, people must have made a boatload of money. You couldn't be further from the truth. Most of those miners went absolutely broke. Absolutely broke. But there were two main entities that made a lot of money during that time. One was Levi, the guy who created the jeans. Levi Strauss was his name. I think he was a German guy. And what he did was he was not out there essentially selling or digging for gold. Instead, he sold jeans directly to those miners. Here's a quick little history lesson. And through that process, he essentially built a massive empire. Same thing for another guy named Samuel Brannan, if I remember correctly. Y'all know I'm from California. We speak a bit differently, so his name is probably his last name is probably pronounced a bit more elegantly, but nonetheless, Samuel Brannan. What did he do? He sold shovels and picks directly to those people that were essentially digging for gold. And fun fact, he became the first millionaire of California. Why do I say that? I share that because essentially those people were not digging for gold. The people that made money were not digging for gold. They sold to the diggers. And right now, when you compare that to what's happening, we are seeing exactly the same thing. In 2025, there is a new version of this. This is just called the AI Gold Rush. Everyone is rushing to build all of these AI products, and most of these companies are going to struggle. But Nvidia, they're the ones selling the chips. Amazon, they have the infrastructure to keep all of these products alive. Google, most internet traffic is running through Google. So you are watching these companies that are renting cloud infrastructure essentially print money. This is our new version of the people that are selling picks and shovels. The lesson here is actually quite simple. During a gold rush, you should be selling shovels. You should not be trying to dig for gold. But of course, who's actually buying these shovels? Bing, bing, bing. This is the second or the other thing here, which is the adoption curve right now. A year ago, basically, we saw a lot of companies, about 55% of companies using AI. Today, we are seeing about 80% of companies use AI. That's not normal adoption. Like normally, if I remember correctly, it took about a decade for half of the population to start using the internet. Right now, we're seeing the complete opposite. We are seeing everyone starting to use AI incredibly quickly. Incredibly quickly. Perfect example, Walmart is using AI for inventory management. And as a result, they actually saved $150 million. Their competitors are also doing exactly the same thing. Target, Kroger, Costco's, all of them are racing to implement AI. Because at the end of the day, nobody wants to be the last company to start using AI when they recognize that some people are becoming incredibly efficient, smart, and making a boatload of money because of this AI stuff. So people are starting to shift from testing AI to saying, hey, AI is the core business. And as an investor, this is, this is exactly what I want to see. Why do I want to see this? I want to see this specifically because it is clear as day that not all of these companies out there are going to do well. When you start digging into the numbers, you can see who's lying about AI and who's actually implementing AI to drive business value. And fun fact, it is most companies that are like most companies are not actually good at implementing all this AI stuff. So instead, they're just signing up, grabbing random contracts, trying to grab these NVIDIA chips, hoping that they can find something new to do. And as an investor, it's beautiful because you start looking at the data and you can very easily see who's lying, who's telling the truth based on where the revenue is going. And this is why, like I say, like as an investor, you do need to be very, very serious about where you decide to put your hard-earned money. You absolutely do. Most people are just like, "Oh yeah, I heard about it. I'm just gonna blindly do it." Like, if you're out here trying to do this investing thing on your own without like actual help, shameless plug for Benson, you're one of the miners digging for gold. And it sucks. It sucks because you're only going to recognize at the end that, doing all of the random stuff without research and of course support, like, is going to be tough out there. But there is like, again, the beautiful part of like learning how to do this stuff. But at the same time, this is why we built Benson at the end of the day. We built it because you recognize that you are realizing that regular people out there are putting their hard-earned money behind random, as an example, crypto coins. Because they heard somebody say, "Oh my God, you can get rich off of this," and they saw Trump tweet about his new coin. They went to go and put $2, $3, $4, $5,000 in it. Fun fact with that Trump coin, 93 or 94% of people who put their money into Trump coin lost money. But again, we're watching a gold rush. The smart people are saying, go and buy the companies that are selling the shovels. So when you're talking about, as an example, what we're doing with Benson right now, we are heavily focused on the infrastructure behind AI. Our best stocks this year are companies that build the data centers, or companies that build the electrical systems that flow directly into the data centers, or of course the companies that sell the chips. We're looking a layer below to say, yo, who is actually building the infrastructure? We focus there. Everybody else is focused on like, oh, I heard about this random exciting thing that has never generated revenue. Junior, that is for you. A company that has never generated revenue or got a product out there to the wild. People are putting their hard-earned money there and only going to realize in 3-4 years that it was ridiculous to put your hard-earned money behind stocks that have never generated revenue. Now, with that said, there is a second order effect of all of this stuff. JP Morgan, their prime brokerage, came out and again said that the stock market is doing incredibly well because of all this AI stuff. Their clients who are investing with them are seeing, record profits. I think the quote from the CFO was like, prime brokerages revenue drove results higher than our wait, what did he say? I'm trying to get that one right. He said something along the lines of like, our prime brokerage revenues drove everything drastically higher than we have ever seen before. And it's because, again, people are super excited about what's happening and they're trying to be smart about it. So we are seeing, some crazy changes. People are putting their hard-earned money to say, hey, we recognize the change and we want to be smart about it. So let me give you just like another tidbit of data here. Infrastructure is a core component of where Benson is putting its money right now. Infrastructure. We're not chasing the random exciting stuff that you hear about on the news. Infrastructure is a very, very important piece of all of this AI stuff. What do I mean when I say infrastructure? I mean AI does not exist without these components underneath it. Again, cooling systems, networking solutions, security, cloud, X, Y, and Z. So when we're talking about infrastructure, part of the reason why people are excited about Microsoft right now is that we are all looking at their cloud revenue jump up. I think year over year, Microsoft's cloud revenue jumped up 20%. 20%. Their revenue for their cloud specifically was $42.4 billion. Again, they're selling the picks and the shovels, not digging for gold. Satya Nadella, who is the CEO of Microsoft, essentially came out and said cloud and AI are essential inputs for every single business right now. Meaning you cannot go and dig for gold unless you have AI right now, or aka these picks and shovels. So now all of this AI investment, all of this infrastructure building, it all requires massive capital, massive amounts of money flowing into the system. Because again, people are preparing for what's about to happen over the next decade. And that brings me to the third force of what's happening right now, which is we are seeing insane amounts of deal making. We have not seen this in history before, where so many companies are deciding to partner up because they understand that without partnerships, they are going to cease to exist. A proxy that we as investors use to determine, partnerships is actually investment banks. For those that don't know, investment banks are responsible for essentially facilitating all of these deals. So when a company goes public, or private for that matter sometimes, when a company goes public, they have to go through an investment bank. Most times, the investment bank is the entity that helps that company get out on the stock market. We saw multiple IPOs this year: Figma, Circle, CoreWeave, all of them. At the major investment banks this year, we are seeing also crazy profit. And again, we use that as a proxy to say what's happening in the market, what's happening in the real world. Morgan Stanley, for example, brought in $2.11 billion this year, specifically from helping companies go public, partner up, X, Y, and Z. It's up 44% this year for Morgan Stanley. Goldman Sachs up 31%, JP Morgan up 16%. So another interesting thing about that is that the CEO of JP Morgan came out and said, I have honestly never seen a summer like what we just saw. Never, ever seen. Keep in mind, the CEO of JP Morgan has been doing this for decades, and they have never seen this amount of partnerships happening. And again, it is because we are watching something change. We are watching these companies prepare for what's about to happen for the next decade, while regular people are pretending all things are exactly the same. And this is, again, why I'll jump on these lives or YouTube now for this matter, is to really share data behind what the heck is going on, because I don't think that most people are prepared for what's about to happen. And this is not from an angle of oh my God, you should be afraid of the world. No. I'm saying if you understand what is about to happen, you can get prepared, and more importantly, you are able to profit off of it. When you hear that JP Morgan, Nvidia, Amazon, Google are making boatloads of money off of what they are doing right now as they prepare for the next decade, if you have any ounce of self-preservation, because that's really what it is, self-preservation, you should be looking at this and saying, cool, I want my piece of the pie. I've been very serious about investing for the last 15 years because, again, this is self-preservation. When I think about this, I'm I want to invest, yes, for myself, but one day I'm going to have kids. In the next, I guess, like 8 months, I'm going to have a wife. And I am obviously going to be the person that, at bare minimum, is creating the financial plan for the family and saying, yo, how do I make sure that my children, grandchildren, wife, and everybody else around me can eat? Now, granted, I don't think everybody's going to be like a nerd like me about this investing stuff, but you would be silly to sit around, watch what's happening right now, and decide to do absolutely nothing. Most people still think this AI stuff is like a fad. Again, we are watching companies jump up in revenue 45%. 45%. That's more than what the S&P does on average over the course of 4 years. We are watching this happen in a quarter. Because again, we are watching a revolution happen right now, and I just pray that regular people start to realize this is very serious. You are either going to watch the rich get incredibly rich, or you are going to be a part of that class that decides to get rich. Now, take that for what it is. Even if you are not using my company, Benson, to help you out with your investing, you should be investing, regardless of whether or not you're on Benson. And I know like half the people in the chat are actually on Benson, so I'll say that. But if you are not, even if you're not on Benson, you still should be investing, and you should be very serious about it. Now, with that said, if you are on Benson, we're handling this for you already. All of this research, by the way, has already been baked into the top 10 stocks that we share every single month. The stock of the day, by the way, that I will share if we get up to 100,000 likes, by the way, that stock we shared 6 months ago for everybody on Benson. Keep in mind that stock is up about 145% since January already. I did get a question from a guy or I don't even know if it's a guy or a woman, but they said, what is Benson? What is Benson about? Good question. I should have been answered that. Benson is a AI investment app, plain and simple. It does all of the investing for you, essentially. Every single month, Benson is going to pop up and show you the top 10 stocks of the month, our top 10 stocks of the month. You're going to say, hey, I like these 2 or 3, 4 or 5, whatever. And then Benson is going to say, cool, we'll take it from here. Actually, Stephanie is spot on. What is Benson? I got you. Benson is your AI investing app that does all of your investing for you automatically. We research thousands of stocks each month and show you our best 10. Once you approve the ones you like, we take care of the rest, buying and selling all automatically. I re-recorded that a few days ago, so I'm hella proud, y'all. Thank you, Stephanie, for reminding me to actually share or play it. But that is Benson. What we do is we use AI to do all of the research, buying, selling, monitoring, all for you, all automatically. Most people at the end of the day, honestly, just don't have the time to do the amount of research that we do. It is humanly impossible to do the amount of research that we are doing. It is humanly impossible. I say that to say, no matter how much time you have on your plate right now, you are just not going to be able to do the amount of research that we're doing. And then on top of that, it is not just research. Every single week, Benson is analyzing your entire portfolio and automatically buying more of your best ones. Why is that so important? Because over time, you're going to start to realize, oh, I didn't just put $100 into it. Benson scooped up another $400, $500, $600. You wake up in a few months and you have a few $1,000s behind some of these stocks. So if you have never done this before, or you just want help with this process, of course I'm biased, but go ahead and download Benson. There was a question that popped up in the chat that said how much to start. Quite literally, Benson will invest as little as $15 every single week for you. Quite literally $15 every single week. You don't need a lot of money to start investing, but no matter what, you need to start investing. Even if you're not on Benson, now granted, I do think you should be on Benson, but even if you're not on Benson, you should be investing. Benson will invest as little as $15 every week for you. And that $15 again is going to be spread out amongst some of these companies that we again. I'm sharing a stock here. It looks like we're going to get up to 100,000 likes. So I'll share this stock here as soon as we get to that 100,000 mark. But keep in mind, people on Benson probably up 60-70% with this stock already. But you know, hey, you got two options. One option is to jump in the game easily. Go to your Apple, go to your iPhone, type in Benson, download it. Quite literally that simple. From there, the app will quite literally do everything else for you. It's going to guide you through the process, and then more importantly, after you get it set up, it's going to do all of your investing for you. You sit back, you relax, and every single week, Benson is going to automatically be buying and investing, selling, and monitoring your entire all of the stocks in your portfolio for you all automatically. Yes, iPhone is required. You do need to be on an iPhone, iPad, or something. If you only got Android, nothing I can do for you yet. In a few weeks, we will be releasing a newsletter where if you are on an Android, you'll be able to figure out what our top 10 are. But even then, you still don't have the full automation. A big part about like Benson is just that it is going to automatically do the buying and selling for you, not just share what are the top 10. And then more important, somebody asked a follow-up question there. What's the estimated timeline on that? We are going to be releasing that within the next 2 weeks, actually, the newsletter. So for all the Android people or even people that are in other countries, in about 2 weeks, you will be able to join the newsletter and say, hey, what are the top 10 stocks? And then at least you'll be able to do stuff manually on your own. But again, half of the people in the chat here do use Benson. I will say that. So if you have questions about like, yo, is it real? Does it really work? How difficult is it? Blah, blah, blah. All those questions, quite literally, drop it in the chat and I can guarantee that somebody here will answer that question for you to let you know that it really works. Jackie just said something. Jackie just said, honestly, I hadn't known most of them companies I'm invested in, and Jackie's just up. Yeah. With that said, there's the last thing happening right now, again, that I was kind of hinting at, which is that, again, we are watching love you too, Christy. We are watching a deal-making renaissance happen right now. All of the big companies, all of the big banks right now are seeing investment banking profits shoot up because all of these companies are like starting to partner up. I don't know if you guys saw like a week ago, there was this massive web that came out, which is essentially like all of the major AI companies have partnerships with each other. All of them. They've partnered up and said, hey, we're doing this together, all together. So as an example, OpenAI, they have a deal with Microsoft, NVIDIA, and now they have another deal with AMD. That deal with AMD was actually a surprise to everyone. AMD, NVIDIA, Microsoft, all were stocks that we have shared on Benson to say, yo, let's scoop these up before everybody else pays attention. Not saying that like, yo, you should go and just throw all of your money into them. That's not what we're saying. We're just saying on Benson, we've been buying some of these stocks for months now, if not longer. Oracle is another one of these big AI companies right now. They just locked in a partnership with NVIDIA to essentially start building an AI supercomputer. They have a new deal with Cohere to essentially start hosting AI models. They even have a partnership with X AI, which is, you know, the company by Elon Musk. CoreWeave, another one of these like major companies that just IPO'd a few months, just raised $75 billion this year because of this AI stuff. They also have a deal with NVIDIA, and they also have contracts with Microsoft and OpenAI. The pattern here that, again, we may not recognize because, again, we all have our own lives. We're all incredibly busy, but that's why I'm also here to share all of this nerdy research with you so that you can, at bare minimum, understand what is coming and what's happening. The pattern here is that these are not just normal business deals. These are essentially survival packs. We are watching the most powerful companies in the world all say we need to be on the same team and get together. Because if we don't, we will be left behind. Sorry about that. Oh, hold on. I got a call coming in. Cool. essentially all of these major companies are starting to team up and say, hey, we need to partner up because stuff is going to be very exciting if we do, but if we don't, it is going to be a shark tank. A shark tank. Every AI company essentially needs chips. It's only like two major players, Nvidia and AMD. In addition to that, every AI company needs cloud. It's only like three options there: Microsoft, Amazon, and Google. Every AI company also needs capital, all of these investment banks. The key thing that I want you to walk away from after hearing all that is that when every single company is making a deal with every other company, that is not competition. It is a feeding frenzy. We are watching, again, all of the most powerful companies in the world say we are partnering up to make sure that we are all getting our slice of the pie. The banks are just the facilitators of all of it. That's pretty much it. And the good thing about all of this is just that this is just the start. This is just the start of what we are about to see over the next decade. So my magnum opus, my magnum opus is that if you are not investing right now, you are going to wake up in a few years and realize the world has completely changed and you have been left behind. We saw this happen in the early 2000s, by the way. We saw a crapload of companies who thought that the internet was a joke. Now, every company today has something to do with the internet. We don't have internet stocks anymore like we did in the early 2000s, but we are watching AI move a lot faster and with a lot more power than what we saw during the internet era. The way I like to think about it is just that AI is completely rewriting the entire internet. So every company that has some sort of internet exposure will ultimately have some sort of AI exposure. So when I'm like talking to regular people, I'm asking them the same questions. Yo, are you investing given what's happening right now? Are you investing? And again, I am not even here to say, yes, you have to invest with Benson. You don't have to do that. You can do this stuff on your own. It's just going to be a lot more difficult. You won't do it better than us. But nonetheless, even if you are not on Benson, you need to be investing. And I want to double down on that specifically for Black people. Now, that doesn't mean that if you're not Black, you shouldn't be investing. Everybody should be investing. But I'm saying generally as Black people, we are the most skeptical of change. So please take this seriously when I say this. You need to be investing right now. We are watching a massive wave come, and the people that are deciding not to invest are going to watch those rich people get even more rich. When you saw this little random nerd on TikTok/YouTube explaining, hey, here's what's happening, you either sit on the sidelines and watch it happen to you, or you decide to participate in what is happening, which is there's a lot of money to be made right now. We are watching the entire infrastructure of the internet completely get ridden over, and we are watching companies make a boatload of money off of it. Again, we are seeing growth. We are seeing like 44% growth in a matter of a few months with these companies. Companies are not just buying each other. Companies are going public a lot faster. Companies are raising capital a lot more quickly, aka CoreWeave again raised $7.5 billion. These are strategic moves that are happening right now. The S&P 500, as a result of all of this, hit new highs. For the last few months, since April, we have constantly been hitting new highs in the stock market. So if you remember nothing else, I need you to remember that when money starts moving at this velocity, it tends to keep moving. Think of it like an avalanche. First, you start seeing like a few rocks come your way, and then suddenly everything is moving. We are well past the rock stage. We are in the midst of an avalanche happening right here. And again, this is why I say this is the perfect storm. Again, profits plus AI, crazy happening, crazy growth happening right now. Companies are using AI to generate higher margins. Again, Microsoft operating income shot up 16%, but their revenue was up 13%. I'll say that slower. Their operating income shot up 16%, but their revenue only increased by 13%. More efficiently, growing the company. In addition to that, too, we're seeing AI deal making happening. AI investments all need capital. Investment banks are providing that capital. Deals are happening right now. And then because these deals are happening, three, there's a lot of profit being passed around. It's like, I see this so clearly. It is simple. It is profit leads to AI, leads to more deals, leads to more profit. It is a cycle. Profit begets AI, begets more deals, begets more profit. It's a cycle. All of this stuff is flowing together right now. And again, we've seen these patterns before. This is not anything new. This is just a random nerd here explaining it in a way that I'm hoping like really makes some sense here. But back in the 1990s, we saw profits happening or profits growing in the same way. We also saw a new technology happening in the 1990s, which was the internet. We also saw a lot of deals happening in the 1990s. Today, we are seeing exactly the same thing, except we're not using leverage. I won't nerd out about leverage here, but nonetheless, it's an important thing for people who really care about this stuff. But with that said, we're seeing crazy profits happening, crazy deals happening, lots of AI improving these companies. And I generally like to say, again, history does not repeat itself exactly. It never repeats itself exactly, but it does often rhyme. And right now, things are lining up to look very similar to the 1990s, except we are slightly smarter. We're not using leverage to facilitate all these deals. People are funding these deals using cash because they've been making so much money. Now, zooming out a bit, I'm excited for the next few months, absolutely. But what I'm really excited about is what's going to happen in 2026. The nerds of Wall Street right now are looking at 2026 and saying that it is going to be an absolutely crazy year. In Q4 of 2025, people are expecting to see about 7.3. I tend to round down, so I'm going to say 7% growth. For the full year of 2025, it looks like the market is going to be closing up around 11%. 2026 looks a lot better. 13.8% is what everybody's anticipating. So I say that to say this is not just what's happening over the next few months. This is going well into the next 2 years or so. Now, there is something that I always have to caveat. Diego, good to see you, my guy. Which is just that, of course, there are some counter arguments here. It, of course, cannot be all peachy. My goal is to never sit here and say, oh my God, the world is going to be absolutely perfect. Look, we can all go outside and see that the world is not perfect. So there are a few other points to kind of, address. I think some people are saying, oh my God, the stock market is so expensive. The way that they generally measure that is a term called price to earnings ratio. It's looking expensive, yes. Absolutely, is not looking unreasonable. Expensive and unreasonable are completely different. Considering about, a 13% growth, we will see price to earnings ratios drop from 23 down to about 19 and a half without a stock moving at all. So I say that to say, like, when people are saying like, oh yeah, everything's expensive, I'm going to wait until, it looks better. You are going to be waiting for some years before stuff looks cheap. We're not in a time where anything in America looks cheap. You can't buy a house cheaply. You cannot buy a car cheaply. You cannot buy groceries cheaply. So nothing right now in America is going to look cheap. And I say that because I know that there are absolutely a lot of people sitting on the sideline saying like, oh yeah, I'm going to wait. You're going to be waiting for a really long time. You are going to be waiting while the market shoots up another 50% and then it's going to drop down, 20%. And the people who were jumping in the game were still essentially up 30%. So I like Dak Prescott here. He just said something not according to Jamie Dimon. Well, let me clarify. Jamie Dimon came out and said, when you see one cockroach, there are probably more. What Dak Prescott is referring to, and I can tell he didn't do his research here, so I'm about to school him for a hot second. Jamie Dimon came out and said, hey, there's a lot of when you see one cockroach, you're going to likely see a few others. So as a result, Jamie Dimon put aside $3.4 billion for losses. That is what he's referring to when he says not according to Jamie Dimon. But to put that in context, that is only 7% of profit. What does that mean? That means that the rest of the money, again, Jamie Dimon does run one of the largest banks in the world. He is required to put aside some of that money for risk. But again, it is such a small percentage of the money that they are bringing in. It is 7% of the money that they are bringing in. So you as a person that is not a billionaire or a multimillionaire like Jamie Dimon, you do not have the luxury of sitting on the sidelines and waiting for a better time. People love to be like, oh yeah, I'm gonna do, and granted, I love Warren Buffett, to be fair. But Warren Buffett is a billionaire that is responsible for trillions of dollars. You as a regular person do not have the luxury to sit on the sidelines waiting for a perfect deal. Warren Buffett is in a phase where it's like capital preservation. We don't have capital to preserve. Most of the time, you need to be getting in there to acquire more assets. So I love when people look at the billionaires and say, what are the billionaires doing? We don't have the same problems as the billionaires. We are not in the same tax bracket as the billionaires. And that is completely not true. Dak Prescott followed up and said he is bearish stocks and crying about a recession coming. No, he's being reasonable that, yes, things won't continue to rise forever. But even in a recession, there is still deals and money to be made. So again, you're reading headlines, you're not jumping into data. But with that said, Dak, if you're sitting on the sidelines, I just hope that you put a portion of your money into the market. But at the end of the day, you're listening to a billionaire or a multimillionaire about a problem that we just don't have and we will never have. We are in different tax brackets. And when one area is struggling, there are plenty other areas that are looking ripe for deals. Perfect example, actually, was my next point. Oh, that was beautiful. That was beautiful, Cam. Cam said Cowboys quarterback sitting on the sidelines. I love that because you cannot be a quarterback leading a team when you're sitting on the sidelines. You need to be in the game. Now that doesn't mean you're delusional about the game. That doesn't mean that, you say, hey, I'm going to sell everything and throw stuff into the market blindly. No, it just means that, look, there's deals to be made. And if you're sitting on the sidelines, you won't profit off of it. That's it. Yeah. Now, with that said, I know that half of the people here are on Benson, half of the people are not. So if you're on Benson, you're set. Benson is already automatically investing for you, is automatically doing the research, all of that. If you're not on Benson, I do want to give you a little tidbit of information, which is just that, again, I've been saying you should be investing. You should be investing. If I'm in your shoes and I'm refusing to get on Benson to make my life easy, I would then, at bare minimum, think about setting up a stock portfolio in this simple way. 30% goes to, let's say, the S&P 500. Another 30% goes to, let's say, the profit leaders. Those are the big FANG companies of the world. And then another 30% goes towards, let's say, AI infrastructure, aka the chip makers, the data centers, all of them. At bare minimum, you should be investing. If you cannot do anything else, go and look at the S&P 500. Start dollar cost averaging. Now, if you're on Benson, we've already started preparing the stocks for November. We have even more exciting stocks coming down the line. And again, while everybody's focusing on like the NVIDIAs of the world, there are companies that supply NVIDIA. So while NVIDIA jumps up 30%, these companies are jumping up 90, 100%. Some of you already know them. Please don't drop them in the chat. Most of you already know what like my favorite stocks are. And those are ones that, again, have just been doing very well for us so far this year. But that is my final piece there. Regardless of what you feel, the data says that the markets are looking very positive over the long term. Short term, nobody cares about. Long term. Of course, I got you, Keisha. Don't worry. So no matter what you are doing, you should be investing. Not investing is one of the worst things that you could possibly do for yourself right now. Els Everson asked a question and said, can we get a premium subscription? We are actually working on that. But with that said, we did get, sorry if y'all could hear my dog. I got a 130-pound dog back in the living room. He heard the neighbor dogs bark. So, yeah. But for our family here, that is Kane. That's the name of the pup. With that said, y'all, we did get up to 100,000 likes. You did not miss anything, Mel. We did get up to 100,000 likes. So I am going to share my stock of the day. But first, I want to be very clear before I share this. This does not mean that you should blindly just go and throw your life savings into this stock. That does not mean that you should be like, oh, I'm just going to YOLO in and hope it goes well. That's not how smart people do it. That's not what we are doing at Benson. So please don't take that as an opportunity to say, oh, I'm just going to go throw money in and see what happens. That's not how you play this game. You play this game smartly. Now, if you're on Benson, what I'm going to say is go ahead and approve this stock on Benson if you don't already have it approved. And then what Benson is going to do is going to continue buying more and more every time it spots a deal for you. And then it's going to, every time this company comes out and gives us an update, it's going to update the entire system to say, cool, do we still think it's a great stock? And if so, we're going to continue buying it. So if you're on Benson, all you need to do is just approve this stock because it is there. I think we shared it for sure back in March, for sure back in May, for sure last month as well. Now, a little context about this company. This company goes by none other than Micron, ticker MU. Now, a little bit about this company is just that, again, since January of this year, they are up 140%. The stock is up 140%. And it's because they do something that essentially no one else can do and every single person needs it. I'll say that again. Every single person needs it, but no one else can really do it. And what they do is they focus on memory. When we talk about ChatGPT, Claude, Mistral, any of these like advanced computers, aka artificial intelligence systems, they all need AI. And more importantly, they all need memory. And because they need memory, essentially Micron is single-handedly the largest player and everybody is knocking on Micron's door to say, "Hey, can we buy more of your chips?" Essentially, plain and simple. Micron's new high bandwidth memory is essentially running that division is already running at $8 billion annualized. For 2025, they are already completely sold out. And what they're saying right now is that 2026 capacity is essentially on pace to sell out already. I'll say that again. Everybody is knocking down Micron's door to say, "Hey, we need your stuff." Micron is already sold out for the year of 2025. They are almost sold out for the year of 2026 as well. And more importantly, no one else is really able to build what they have. Micron is top of the line, cream of the crop here. They have a tight supply, and it's a product that every single AI data center needs. Every single one of them needs it. In addition to that, there was a legislative thing that just happened, which was the CHIPS Act, which just essentially pushed over another $6.1 or $2 billion towards Micron. Because now we are starting to try to build all of this stuff in the US. I cannot underscore this enough. We are watching the entire world change right before our eyes. And if you are getting a hint of what is happening, you should be paying attention and deciding to follow the money. We are seeing, again, about $6.1 billion go towards Micron and a few, like 2 or 3 other people. And that's because America now wants to start building all of this stuff locally or domestically in the United States. So everybody, of course, looks at NVIDIA. NVIDIA has had its time, and I'm still a holder of NVIDIA, so let's be very clear. I still hold NVIDIA. But those chips are completely useless without Micron. Micron sells the memory that keeps AI running at full speed. Demand is real, supply is tight, and Micron, more importantly, is growing their revenue. Again, they have already sold out all of their chips for 2025, and 2026 is halfway sold out. So the bottom line is that, again, we've been talking about these 3 major things. Micron is a clean way to essentially ride the AI infrastructure build out with visible growth, aka revenue up, booked demand for 2025 and 2026. And more importantly, the United States government is also supporting this company. When I was talking about the perfect storm, I'm quite literally describing exactly what is happening to Micron. Profits, AI, and capital investments all put together. Micron is making a lot of money, aka profit. They are the infrastructure play behind AI. Again, NVIDIA chips are useless without Micron. And then 3, we have the United States government coming in to say, hey, we need to support these companies so that they can start building more of these chips, memory, data centers, all here locally in the United States. So this is quite literally the perfect storm. Now, again, that does not mean you go and just throw your life savings in it. That's not what we're saying. We're saying be smart, pay attention. If you like it, if you're on Benson, by the way, just go and listen to the audio clip. Because, of course, if you're on Benson, you get the research behind it. If you like it, approve it so that Benson can start buying more. Now, with that said, I saw a few questions here. If you are not on Benson and you're trying to get access, all you do is go to your iPhone, download Benson AI. If you're on TikTok, you can see the text right above me. Download Benson AI on your iPhone, sign up, and essentially Benson is going to guide you through the whole process. It's going to also show you our top 10 stocks for the month of October. So you're going to know about the stocks that I'm only going to talk about in the next few months. So a little a little secret here is just that I generally only talk about the stocks publicly after people on Benson have had the opportunity to listen to the research, decide if they like it, X, Y, and Z. Again, Micron, we've been buying up since I think like April. Most people on Benson are probably up 50+% with Micron already. Um, so yeah. If you are on Benson, you're searching for Micron, all you do is go to Benson, click on stocks, and just search MU or Micron. It will take you directly there. It was on the list last month. So, yeah, it was on the list last month for our top 10. And today it is our stock of the day. Now, with that said, I want to say thank you to everybody that jumped on. What I'm going to do is I'm going to stay on a few more minutes for questions, specifically on TikTok. So I'm going to shut down the YouTube here. Stay on for a few more minutes just to answer some questions. But for people that are on TikTok, peace out. I will be back on Tuesday. Now, with that said, it is just TikTok here. We got a few questions in the chat. No, we don't work with Fidelity, Tina.